Ever wondered how the 2023 tax changes might affect your pocket? You're not alone. This year brings a new wave of tax alterations that carry significant implications. From shifts in tax brackets to revisions in deductions, understanding these changes is crucial for everyone, especially individual taxpayers. It's not just about how much you'll owe, but how you can strategically plan to mitigate the impact. In the next few minutes, we'll break down these complex changes into manageable segments. First off, it's crucial to understand the major changes that have taken place. As we delve into the tax landscape of 2023, there are some key shifts you should be aware of, starting with tax brackets. This year has seen an adjustment in the income ranges for each bracket to account for inflation. It's not a dramatic shift, but it's still significant enough to affect your tax liability. Moving on to deductions, there's been a considerable reshuffling. The standard deduction has increased slightly, offering a bit more tax relief for those who don't itemize. For those who do itemize, though, you might find some of your go-to deductions have been reduced or eliminated. It's a mixed bag, so it's worth taking the time to understand these changes fully. And then we have credits. The Earned Income Tax Credit and the Child Tax Credit have both seen substantial changes. The former has been expanded to include more taxpayers, while the latter has been altered in ways that could mean higher credits for some families. Lastly, the alternative minimum tax exemption amount has been increased, which could help reduce the tax burden for some high earners. These are just the highlights, of course. The tax code is a complex beast, and these changes are just the tip of the iceberg. But by understanding these key shifts, you're arming yourself with the knowledge to navigate this new landscape. With these changes in mind, the next step is to understand how they might impact your financial situation. So, how might these changes affect you as an individual taxpayer? As we delve into the heart of the matter, it's important to understand that these tax changes have profound implications for individual taxpayers. Let's take a look at some common scenarios. Firstly, if your income has changed in 2023, you might see a shift in your tax bracket. For example, if your income has increased significantly, you could find yourself in a higher tax bracket, which might result in a larger tax bill. Conversely, a decrease in income could place you in a lower tax bracket, potentially reducing your tax liability. Secondly, changes in your family size could also affect your tax situation. Let's say you welcomed a new child into your family this year. This could increase your eligibility for certain tax credits, such as the child tax credit, reducing your overall tax bill. Lastly, let's consider the scenario of home ownership. If you've bought a house in 2023, you may be eligible for the mortgage interest deduction, which could significantly reduce your taxable income. On the flip side, selling a home could result in capital gains, which might increase your tax liability. In essence, these tax changes could have a wide range of impacts on individual taxpayers. However, it's crucial to remember that these scenarios are merely examples. Every taxpayer's situation is unique, and the impacts can vary greatly. Remember, these impacts will vary depending on your specific circumstances. Navigating these changes can seem daunting, but don't worry, we've got some tips to help you out. Firstly, it's essential to review your financial plans. With the new tax changes in play, previous strategies might not be as effective. Take a close look at your income, expenses, investments, and savings. Understand how the changes impact these areas and adjust your plans accordingly. Secondly, consider seeking professional tax advice. Tax laws can be complex and confusing, especially with major changes thrown into the mix. A tax professional can help you understand these changes, how they affect you, and what you can do about it. Remember, it's not about evading taxes, it's about efficiently managing them. Next, keep yourself updated. Tax laws are not set in stone. They can and do change. Staying current with these changes allows you to adapt your financial strategy as needed. You can do this by following trusted financial news sources, subscribing to tax newsletters, or even joining online forums for discussions. Lastly, don't panic. Change can be intimidating, but it also brings opportunities. With a well-considered plan, professional advice, and up-to-date knowledge, you can navigate these changes confidently. Remember, the goal is not just to survive these changes, but to thrive in spite of them. It's about making your money work for you, not the other way around. With these tips in mind, you'll be well prepared to navigate the 2023 tax changes. To sum it up, the 2023 tax changes bring both challenges and opportunities. These shifts in taxation, from major adjustments to nuanced details, have the potential to impact individual taxpayers in various ways. Proactive planning and remaining informed are your best tools to handle these changes adeptly. The importance of understanding these tax changes cannot be overstated. Remember, understanding these changes is the first step towards smart financial planning. Stay informed, stay prepared, and you'll be ready to navigate the 2023 tax changes like a pro.